All right. It's really more a crypto talk. Bitcoin Brandon here from Los Angeles, California. Go ahead and type in the chat box where you're listening in from. Make sure you hit that thumbs up button on the YouTube channel. Hope everybody had a great weekend as we begin the first day of April. First week of a new month. 1 quarter down, 3 more to go for 2019. Time flies by fast. Good morning, Jay Guillory, Lorna Vasquez, Tony Pinkston, Stan Williams, Gina Muhammad, Shauna Ross. Welcome, welcome. Good morning, everybody. As a disclaimer, I'm not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share suggestions. And it is up to you to make an informed, intelligent decision on which direction you want to move into in the crypto space. Good morning, Melanie, Linda Reuter. There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make it happen? What vehicle of choice is your starting point? Make a decision, take action, remain focused, and do not get distracted. Now, following these rules is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. So let me turn on screen share. All right. You should be able to see my screen. And first thing we do is we're going to look at the markets. What's going on? And I am loving this new coin gecko that we discovered yesterday. I'm going to be using this from now on over CoinMarketCap. I still will have CoinMarketCap up next to it so that I can do some comparing. But this just has a whole lot more features. So for one, let's see, the market cap is at 147 billion. It is up 0.86% in the last 24 hours. Volume is at 29 billion. Let's see, 24-hour volume. Bitcoin dominance. Whoa. They've got Bitcoin dominance at 49.5%. That's less than 50%. Ethereum's at 10%, Ripple's at 8%. But let me look at CoinMarketCap. I want to see the difference here. CoinMarketCap has it at 50.2%. BTC dominance. 146 billion, a lot of money, according to CoinMarketCap. About $2 billion more dollars has been added to the space. 3 billion here. And if BTC fell below 50% dominance, that means that more money's been going into the altcoin. So let's see here. I want to look at, they've got a new feature, I guess, here, Social Cap. So they're ranking their top coins based on, here's what they do. This metric is used to coin's most prominent spokesperson on Twitter to represent the social power of the coin community. Social power. So social cap equals price times Twitter followers I guess that does have a meaning. It's like influencers. These coins are out there more. Bitcoin, Ethereum, Bitcoin Cash, Litecoin, Binance Coin, Monero. But I'm not there yet. I'm going with the traditional. Stick with traditional, top 10. So Bitcoin, the last hour, the top coins are in the red. 24 hours, it's in the green. And 7 days, it's definitely in the green. Bitcoin's up 3.6% over the past week. Ethereum 3.9%. EOS is up 14%. This is why I like this chart. I'm able to tell that. Let's see. You know what I got to figure out on here? It's easy for me to do best case, worst case. Well, I can do it I guess I can do it this way. So the best performing coins over the past 24 hours, Walton Chain, 18.2%, Dogecoin, IOST, OKB, Enigma, Huobi. Worst performers, Nash Exchange, Tezos, Loopring, Ravane, Polymath. So what if I wanted to go back to normal? What would I need to do? So that's the best price. I'm going to go by price. Well, I'll just go by coins. I'm still getting used to this one, how this works. Oh, I just do this. Yeah, there we go. Top 10 coins. Okay. All right, I'm getting the hang of it. The market cap last 7 days. Pretty good. Pretty good. Let's see some news first. Bitcoin price could blitz beyond $150,000 during the next bull cycle. So according to this guy, Joseph Young, the next bull cycle is going to be in 2023. So let's see. Despite the 82% drop in the valuation of the crypto market in the past year, and the inability of Bitcoin to recover beyond $4,000 in the past 3 months, one analyst sees the dominant crypto surpassing $150,000 by 2023. Josh Rager, a cryptocurrency technical analyst and investor, said that based on the price trend of Bitcoin since 2011 and the pattern of Bitcoin rebounding from a correction following an all-time high, he sees Bitcoin achieving a new peak price in 2051. In 2051 days by 2023. Peak price. The next Bitcoin cycle should peak out in July 2023 and could reach a price at $150,000 or more per Bitcoin. So cycle peak price is 2011, $31. 2014, $1,177. 2017, $19,764. 2023. Wow, you see these projections? 150,000 plus projected. The long-term projection of Rager is particularly more notable because he has expressed his bearish view on the near-term price trend of Bitcoin. Can Bitcoin avoid a downturn and continue to move up? Many traders and technical analysts have similarly said in recent weeks that Bitcoin could avoid a potential drop to a support level at 3,500 if it could sustain its momentum in the $4,000 region. In the past 3 months, Bitcoin has continuously tried to break out of the $4,200 resistance level, which is widely considered to be a key level for the asset to climb meaningful ranges above $5,000, but has failed at every attempt. On February 24th, for instance, Bitcoin did break out of 4,200 by achieving a price of 4,206, but failed to hold it and almost immediately fell to 3,700. Rager noted this week that if Bitcoin can breach $4,200 and hold above the key level, It will be able to prevent a further drop below the $4,000 mark and maintain its momentum throughout the months to come. There are multiple scenarios for Bitcoin. Fact is, nobody knows the next move. It's been a historically good idea to short or sell near 4,200 and buy or long near 3,500. A break close and a hold above 4,200 is bullish in the short term. Break of 3,500 is very bearish. Sideways movement, BTC movement is great for alternative cryptocurrency pumps, he explained. I agree with all of that. At this phase of the cryptocurrency market, wherein most projects are struggling to secure funding to expand their operations and resources are being focused on quality projects, it is difficult for industry executives to be optimistic about the future of the asset class. Why? Yet throughout March, the vast majority of industry executives in crypto have expressed positivity towards the asset class and the level of activity in the industry amidst a 16-month bear market. U.S. Barry Silber says U.S. dollar plunged 10% in value against Bitcoin in first quarter. In general, consensus of traders and technical analysts seem to be that the bottom of Bitcoin and the cryptocurrency market has either been established or is close to being established, which may lay out the foundation for a gradual recovery period throughout 2019. As seen in previous recoveries of Bitcoin, analysts do not expect the price of Bitcoin to experience a movement like the 2017 bull run in 2019, but rather a slow and gradual climb to previous levels in an extended period of time. I agree with that. Strong sell walls. On Monday, Bitcoin pushed through a $22 million sell wall to surpass 4,100, and for it to move past the anticipated $4,200 resistance level, it would need to push through another $30 million in sell orders. I want to look at that real quick. At 4151. So it hasn't moved up 1.2% last 24 hours. So let's see how long it can stay at this level. I'll see how long Ethereum can stay at this level before it goes back to $200 a coin. Even Ripple at 31 cents. See if it can go to 40 cents. One technical analyst said that the market absorbing stacked sell orders at 4,100 in a short time frame could push the asset towards 4,300. Sell off getting immediately bought up. Very bullish. We'll be testing 4,300 in no time, he said. Achieving 4,300 in the near term by surpassing the 4,200 resistance level would alleviate significant pressure on the dominant crypto, which could enable the asset to potentially aim for higher resistance levels it has not been able to test since November 2018. All right, going to the next. Bitcoin awakening from bear slumber for first time since 2017. I think it's too early to claim that. Maybe after it goes past 6,000, we could talk about that. For the first time since the bull market in 2017, the Bitcoin price recorded 2 consecutive green monthly candles, which suggests that the dominant crypto may be en route to breaking its bear trend. In technical analysis, a green candle forms when an asset climbs higher from its opening price in a certain time frame. If a monthly candle closes as a green candle, it demonstrates a monthly upside price movement. Consecutive monthly green candles are positive for Bitcoin. In February, monthly candle of Bitcoin opened at 34.34 and closed at 38.23, with an 11% increase in price. The March monthly candle of Bitcoin opened at 38.23 and closed yesterday at 39.42, with a slight 3% increase in price. Bitcoin has not recorded 2 consecutive green monthly candles since December 2017, when the price of Bitcoin was averaging at around $20,000 a coin. If Bitcoin remains above the 4,000 level by the month's end, which many analysts predict would happen due to the positive sentiment around the crypto market, it will record 3 consecutive green candles, a move that could reverse the bear trend of the asset. The monthly chart paints such a simple yet telling picture, said a technical analyst regarding the monthly candle chart of Bitcoin. I think we can agree. This looks like any other bearish support resistance flip. With that said, it'll be pretty significant if we do clear the 4,300 to 4,400 level. Plenty of free space above. Really? Okay, I want to take a look. Plenty of free space above the 43. What mark did he say again? 43 and 4,400 level. Let's see. All right. The buy wall is at 41. Really? That can't be right. Really? 41.16? 24-hour high, 41.59 low. Wow. This hasn't happened in a couple of months. The buy wall is over 4,000. The sell wall at 41.80. So 4,300 to 4,400 is here, but then it's going to hit a wall again right there. 44.88. But if it passes that, it could slide all the way up to 5,000. Oh, so that's why he said that. Look at this. There's a lot of support coming in. People believe the bottom has been hit. Normally this chart's way back here. What's the bot doing? 41.19 is the bottom, they say. And their high predicted to be, where are you? Not on the charts. Unless they pulled it down. Interesting. They're not planning on selling right now. They're just buying. Something's going on in the crypto market. I feel it in my gut. We're going to see something happening this week. I don't know what. I can feel it. Something's happening because things aren't looking like they're supposed to. All right. Anyways. Yeah, it may gradually climb to the dreaded $5,000 to $6,000 range. Yeah. So that's what this chart shows. If it goes past this 4,300 mark or 44.95, it can slide all the way up to 5,000 right there. That's an accurate statement. Okay. Bitcoin has struggled to test the 4,200 to 4,300 range over the past 3 months, and every attempt at it led to a 3 to 4% drop in price immediately thereafter. But the difference between the recent Bitcoin price movement and that of the last few months is that alternative cryptocurrencies are continuing to surge against both Bitcoin and the US dollar, indicating that investors are taking on more high risk and high return trades. Sell-off getting immediately bought up is very bullish. We'll be testing 4,300 in no time, a trader said after a $22 million sell wall was absorbed by Bitcoin to move past 4,100. Yeah, see what he's saying there? Move past 4,100. That's why I saw this sell wall, or the sell wall here, 41.86. The buy wall is at over 4,000. So it's gobbling up. The equal mark is 43.90, 39.11. So this is slowly pushing something. Yeah, something big's about to happen. I don't know which direction that's going to go, but it looks positive in the green. There still remains large sell orders to be covered above the $4,100 mark, about $30 million worth for the dominant crypto to cross the crucial 4,200 resistance level. It may require an extended time frame for the asset to cleanly break out of the $4,200. So for those of you guys that don't understand what that means, it means that these sell orders need to be gobbled up. Somebody must be willing to buy Bitcoin at these prices. And then you're going to see this continue to move. Right now, the average people are buying is at 4,100, but the sell orders are already at 42.50 to 42.90. So they're saying it's about $30 million between here and here that needs to be bought up. Is the bear market over? Throughout the past week, several analysts have said that the crypto bear market has come to an end, and that Bitcoin is also close to breaking out of its 16-month bear trend. Various technical indicators show that the crypto market has regained most of its momentum in recent weeks, primarily due to the recovery of alternative cryptocurrencies and low market cap crypto assets. The crypto bear market has been over for 3 months now. BTC breaking above 4,200 will mark the end of the bear trend that started in January 2018. Going to miss this big fellow, economist Alex Kruger said. Regardless of the short-term price movement of Bitcoin, if the market performs strongly in a longer time frame throughout the next 4 weeks, the asset class may demonstrate a gradual accumulation phase, which would be essential in preparing the asset class for a 2017-esque rally in the long term. I'm still sticking to we have 1 year till May 2020 for the sweet zone to get as much coins as we possibly can before the rocket takes off. But it's going to be a slow climb that I predict until then. All right. This one caught my eye. Interest-paying crypto accounts are this year's leading trend. Interest-paying. Isn't that like a bank? Because if you have money in the bank, aren't they paying interest on your money? It may not be a lot, really nothing, but what if they do that in the Bitcoin space? Interest-paying crypto accounts. 2019 has witnessed a Cambrian explosion of crypto interest schemes. Previously, the only way to make a passive income on your crypto was through holding and hoping it would rise in dollar terms, or to operate a masternode for a dubious altcoin. Today's investors have it a whole lot easier thanks to a string of new savings programs that promise annual interest simply for locking up digital assets. Okay, you got my attention. Crypto companies are borrowing from the fiat banking toolbox. Last week, Nexo became the latest crypto company to introduce interest to its customers, with the provision of up to 6.5% annual on stablecoins, DAI, PAX, USDC, USDT, and TUSD. Interest will be compounded daily, and funds will be protected by custodial insurance. Unlike most of the crypto interest schemes to have emerged this year, Nexo enables its clients to withdraw any amount of crypto at any time. As such, their crypto account essentially becomes a checking account, stocked with dollar-pegged tokens, but bolstered by the promise of annual interest that exceeds that of most fiat savings accounts. Now, I am a little bit spoiled, but 6.5% annually is not getting my attention. All right. In the crypto space, 6.5, I could spend 2 days knowing what I know, trading, if I wanted to look at the chart all freaking day long. 2 days and make more than 6.5% on maybe 4 or 5 trades. Sideways trading. But a whole year? Now, in the banking world, that might be good. I was in the bank the other day. I was doing some business, and the lady, every time I'm in there, she tries to, she pulls me off to the corner office. Mr. Ivey, you have a lot of money in this account. I mean, wouldn't you be interested in if we move that into this form of account, banking or whatever, a business account? The benefit is, if you can guarantee that you hold $20,000 in your account and never go below that, then you would get like 2% or 3% at the end of the year. And at this amount of money, that's a couple $100. And I'm like, really? Am I supposed to be excited by this? Let me get this straight. You want to hold my 20K plus. For me never to sign that I will never go below that amount. My award is a couple dollars, but you guys get to loan out my 20 something plus and make 19-20% interest on it on whoever you're loaning my money to. And then you're going to give me 2% while you keep 18%? She kind of looked at me funny. I didn't say it in a condescending way. I was being joking with her, but she got my point. But anyway, so if you are sitting on a bunch of coins and you're just waiting for the coin to go up in value, would it hurt to have it in an account like this if you're not going to touch it anyway and gain an extra 6.5%? No. This is why this has my attention. If you're going to sit on the coins anyway, next question is, what's the safety of their system? Because again, you're giving them your coins. Therefore, you don't own your coins anymore. You don't control. Yeah, you have access to pull it out at any time, but they have your keys. Huh. That's the security risk I have with that. BitHub just got hacked for $30 million. Quadriga, the largest and most secure exchange in Canada at one time, somehow is missing $190 million. If you don't control your own coin, it's liable to get taken. In other words, at some point it will be. That's my motto. All right, let me keep reading this. So, as such, their crypto account essentially becomes a checking account. Okay. Nexo is by no means alone in incentivizing customers to secure their crypto in a custodial account and be rewarded. BlockFi will disburse 6% annually to clients who store ETH or BTC deposits. LedgerX introduced its own interest-bearing BTC account last year for U.S. investors, while Compound provides up to 4.2% annually for assets such as DAI. At the start of March, Universal Protocol Alliance announced a stablecoin that would pay interest up to 10% per year. Now you got my attention with that. So for them to be making these claims, that means they've got to be registered. So I guess that answers one question in the security space, because they can't say, I can guarantee you 10%. I can guarantee you 4.2% annually. That ain't going to fly in the United States unless they're licensed and registered, which means that you're protected if you do have your coin sitting over there. So I just answered one question on the security side. So we got LedgerX, Compound, Universal Protocol Alliance, and Nexo, balancing the risk and rewards of interest-bearing crypto accounts. When BlockFi announced its crypto interest scheme, eagle-eyed readers scrutinizing the terms and conditions spotted that the asset would not be insured against losses, while offerings. Wait. Let me read that again. I read that too fast. I was thinking about something else. When BlockFi announced its crypto interest scheme, eagle-eyed readers scrutinized the terms and conditions spotted that the assets would not be insured against losses. That's a major red flag. Don't get nothing there. Don't put nothing over there. While offerings from the likes of Nexo and Coinbase custody are fully insured. Nexo. I am going to save this one for future reference. I want to have nothing to do with Coinbase. So they're fully insured. Consumers should nevertheless familiarize themselves with the small print before committing. Coinbase hasn't begun offering crypto interest accounts per se, it should be noted. Rather, it's added staking as a service, which obliges holders to lock up qualifying proof-of-stake coins such as Tezos. The end result to clients is much the same as receiving interest. However, by the time Coinbase has taken its 2%, stakers will be left with an annual yield of around 6%. That ain't bad. It's basically just another form of staking, except you're just having companies that are saying we are going to stake, 5 or 6 different coins for you. I don't have a problem with that, especially for those of you that are long-term holders. You're like, I'm holding my coins for the next 10 years. Well, just think about that for a second. If you've got $100,000 worth of coin, that means you're getting, if they are guaranteeing you 6% a year, and you multiply that over 10 years, that's what's 10 times 6? That's 60. So you just made 60 grand on your 100 grand. I'd rather do that in a year, but if you're going to hold it on 10 years anyway, and that ain't bad, especially if you're much larger. What if you had $1 million? So you're talking about, off of my $1 million, I just made an extra $600 million in the next 10 years. I'm sorry, 600,000 in the next 10 years. This ain't going to work if you only got $500. It ain't worth it. This does have my attention. Staking and interest are not the same, as industry commenters such as Melton Demurers have been keen to stress. For the end user, however, be it an institutional client who doesn't want to get their hands dirty with the technical side of staking, or a retail client who doesn't want to assume custody of their crypto, the outcome can appear indistinguishable. Financialization of Bitcoin is inevitable and vitally important, argued Zane Pocock in a Medium post on March 29th. He continued, financialized structures allow for much better liquidity, debt structures, and other benefits that mean institutional custody and lending can be good for Bitcoin. Pocock urged investors to do their own research into the interest accounts being offered by crypto companies and not to fall for the illusion of free money. Bitcoin is our emergency exit from the outcomes of precisely that fallacy. Crypto interest programs remain an alluring proposal, however, and their number is set to multiply over the coming year. As Shapeshift's Eric Voorhees pointed out, once the inflationary nature of central bank currencies is factored in, crypto interest accounts become significantly more appealing than their fiat counterparts. I agree. All right, that is it for early morning crypto talk today. I learned something new. In fact, something new that I can possibly invest in. I'm going to be doing my own research on this Nexo company. Since they are fully insured, that has my attention, so I'm not afraid I may lose my coin. So if they're going to be holding coins and I'm going to get an interest on it and I can pull my coin out at any given time, hey, that's a win-win situation. Here's my new motto in 2019. I mean, really though, letting your money work for you, even if you're holding your coins, is it working for you? If you're not making money off your money, you're not making money. Somebody challenged me on that a couple of weeks ago. I make $30,000 a month. Really? How are you making $30,000 a month off of an investment? No, I got 15,000 people on my team. Auto ship. You ain't making no money. The moment they stop auto ship, your income stops. Let your money work for you. Speaking of that, I had a major announcement I talked about last Friday. I did a Facebook Live. It has almost 1,000 views now. If you have not listened to it, I would encourage you to do so. I will be pulling it down tonight. I'm pulling it off. Why? Because most of the stuff I do in this space, also, I'm going to start to move more behind the scenes. And I want those updates to be coming directly from the company itself and not from me on behalf of the company. We are, 4 or 5 times bigger than we were before. Thousands and thousands and thousands of people who don't even know who I am are now a part of the company. Most of them are in Asia. So I want the company to be the lead on this. I just wanted to inform those who have been in my network. We've been sitting patiently, most impatiently, for the past couple of months. So I know that everybody deserves to know what's going on, what's happening. So, but I'll be pulling that down. So if you have not listened to it or watched it, go back. It's on my Facebook page and get yourself filled in on what I'm excited about, what I've been working on behind the scenes, and that I'm about to come out of my self-induced cave that I've been in since probably November. You'll be seeing and hearing a whole lot more of me. So with that, I hope you guys have a great day. Depending on the news, I'll be back tonight for late night crypto talk. Bitcoin Brandon out. Have a great day. Bye-bye.